price action is supported. We put in a low after just under a 2% correction, higher low. I mean, the bears would have to break back below, I'd say 66.80 on futures. Take out, when was this chop? Friday. Did we have news during PCE? Yeah, this is kind of the Friday chop. Friday chop zone right in there. So if we take out that cluster, I think 66.80, or take out that, PCE news cluster around 66.60, then we resume, maybe some negative gamma to the downside. But anyway, we just approach it for the morning. Let's follow the math, follow the numbers, follow the probabilities. Based on Friday's close, we're opening up way, way, way higher. We can do a shift here. I do want to make sure there's kind of two levels we watch with the daily profit play indicator. There's the previous day's close, and if we have a big gap open, we shouldn't exceed this kind of VIX box based on a 15.8 VIX. That's just under 1%, just under 1%. But if we're going up that high, I mean, it's one of those mornings where possibly from the close Friday to the, close today, if we can go 1%, let's kind of look at that high low. We shouldn't go much higher than probably this 67.07. And we shouldn't go much lower than around 65.80. But I also like to crunch the numbers manually and see where we get for 1%. So from the close, 1%, I mean, that puts us back up towards highs. But we're just under that with the VIX at 15.8. So 15.8, about 0.99%. So 67.05 to 67.10. Potential top on the day. And let's go bottom. 0.99, 60, 65.80. Oops. Okay, and we had two tests of those 70. This was 75 last week. This was 70, like 70 on the nose last week. So potential top bottom. You can see it here in the daily profit indicator. There's your 67.07, 65.80. So manually calculates out the same way. We are going to be gapping higher. This gamma level is probably going to get hit first thing this morning. So of course, I'm wondering what's the update. I'll bring up my dynamic trend. Let's see this thing in real time when we have opening bell here in about 17 minutes. Okay, so pre-market 66.70. Interesting. So pre-market, you have a larger level down here at 66.10, but you are gapping higher this morning. Let's make for an interesting Monday. Usually Monday should be pretty calm, honestly, but last Monday was not calm. This was last Monday. Last Monday was all directional. Tuesday was a recentering. Wednesday, let's see here. Monday, Tuesday, Wednesday, Thursday, Friday. So up Monday, down Tuesday, chop Wednesday, chop Thursday, chop Friday, coming into a new week. Overall, we did pretty well considering the volatility. Curious how extended we are on futures. I do have a futures workspace here for some VWAP stuff. Give me a second. It should be this one for futures. Pull up this workspace. So shorter time frame. There should be a session VWAP in blue. I think this is the 1X. Yep. So there's your second and third bands. So not ridiculously overstretched. Running into some resistance around the second band. So this is where kind of price is always kind of anchored. That's the point. If it's above this blue line, it's supported, it's bullish. I don't often trade reversions in futures unless it's like up to the second or third level. Then we usually see some gravity, but it just stays supported. And this week, I do want to play around with it. I'll do this kind of offline, but bring this to some of these sessions. I'm going to start playing around with. I did this last week in a daily profit play session. If I can put the Dow together with the SPY, I want to mark some opening bell sessions. Let's go. Opening bell marker. So I'm going to look back here and do some replays. See if I can get the blue line to actually tick up before the orange or the I guess pink line. This is the Dow and this is the S&P. Okay, so as a choice of trade, I'd rather trade S&P. If I can have the Dow in any way, shape, or form lead, then maybe getting long S&P after we start to see some uptick and some divergence. So it's kind of looking to see. I'm going to play around with this at a couple opening sessions, but if we start to see this thing leading, then some good direction on how we can kind of play S&P in the short term. But I'll go back and I'm going to use the replay feature on some of this stuff. So I'll have some fun with that this week. All right, VIX 1582. Got about 13 minutes for the open. Have our potential top and bottom. Plan wise today, that's a pretty big push up in futures. Again, S&P, you're looking for quite a bit higher. That is looking to be around point. It's like right hand in hand with futures, 0.52%, 0.53%. So we're open this morning. Let's find our plus minus. All right, just loading the broker platform. I'm going to see the plus minus on the day. If anybody has their Tasty Trade platform up, let me know the number. Look at today's SPX expiration. So SPX, we got a plus minus 31 on the day, 31.07. So if we're opening up around 50 something, right? Nope, we should be opening up around 70 to 75. That means we should be able to sell above 67. So if we're above 67, that means that we are getting through, again, based on Friday's close, getting above the VIX box, which I certainly like, getting up into this like 150 ATR. Totally don't mind those levels. So possibly like a 67.05 or 67.10 previous highs. We stalled right at 6,700. So for a Monday, that's a pretty big Monday to push if we're going to go that directional. I feel like most of the direction is going to come from possibly just being, opening higher. We open higher, we chop for the day. The market can say, close to all-time highs. It can say positive on a Monday. But if we can sell high enough, hopefully that works out in our favor. Get out of here. Sorry. There's a mosquito right in front of me. Just chasing ghosts here. All right. Any other questions? Prepping us for the day. So, major news for this week. This week, we are wrapping up the month tomorrow, wrapping up the quarter, non farm payroll, unemployment claims. That's all coming this week. So, high impact news. We've got Trump on the calendar today. What's he doing? Okay. Press conference for Israel. Looks like with Netanyahu at the White House. Pending home sales. That'll be interesting. I mean, do we have like higher geopolitical tensions going on? Probably. But first president ever I've seen on the economic calendar. It's not as popular as it was when we first started this term. This administration was, I mean, Trump was on the economic calendar like every week, which was kind of crazy. But I think that's since kind of backed off. You know, Besant's been taking the reins for a lot of the speak, and I mean, we're pretty much seeing the administration stack the Fed. Rate cuts and stuff in October are still coming, more than likely. Fed is just a mess. So rate cut, rate cut, rate cut, rate cut. Now it looks different than last week. So this would be cut number 2, 3, 4, 5 out to the end of 2026. And then either it's a pause or possibly one more. But this is what the market's been struggling with. The message after September 17th rate cut has not been just crazy dovish. Inflation's still higher. We clearly have a labor issue in the country. It's there's basically like a hiring freeze. There's a looming government shutdown, which might actually happen like this week. Debt ceiling debate is a lot different than government shutdown. We've seen the government shutdown several times. It doesn't typically impact the markets, but I feel like this time it might, because all this pressure's on the labor market pressures, kind of forcing the Fed's hand to cut, more aggressively, and these percentages continue to go higher. So it looks like a pretty high probability that we have a cut coming in October, which is the end of the month, October 29th, as well as December. So it gives us November. Makes for a pretty interesting November makes for a pretty interesting window to just see whatever volatility comes. I mean, I thought we'd have volatility in September. I thought we'd have a pullback in September. We didn't. This is, in fact, if we close today, that's green. If we go SPX on the monthly candle, this is probably top 10 Septembers ever. If we're gapping higher today by 0.5%, that's going to push us back near. Look at this thing, like 0.5%, 66.78. Let's say we just hang out there, possibly even get back to these highs. The candle for the month. Let's say we get close to these all-time highs. 4.67%. We're still looking at like a 4+% September. Pretty amazing. All right, we'll keep an eye on that one. Fed watch tool, like I said, likely cutting rates again in October, again in December. If we're going to see a Q4 rally, we still have earnings kicking off here in October. So, I'll be active with newsbreakers in October for some of those big plays. What's everything look like for Mag 7? What about some big high flying tech stocks? Are they crazy volatile? Have things overrun and overstretched? And if so, earnings kind of refocuses the efforts on where things need to stabilize or be kind of fairly valued. We'll see. Or if it's just throwing money at everything and everything goes up, enjoy the melt up, and we'll just keep embracing it. Yep. Yeah, I mean, this year has been all about the pain trade. The pain trade has been everyone's bearish, everyone's worried about a recession, everyone's worried about it. It's like the wall of worry has been incredible since, I mean, obviously rightfully so, from the realities of like March and April, right? You can see here like March was a terrible month. April was a terrible month. I mean, it's hard to tell, but this is the body of April, and the wick low goes all the way down here. So March was awful. April was awful. And then intra month, it kind of came all the way back up to close only 1% lower. But the amount of follow through, I mean, I understand a follow through typically with this type of volatility, a follow through back up to the highs. But the fact that we barely budged once we got above the highs, it's been that kind of technical reason of like daily overbought, weekly overbought, monthly overbought with divergence, stretching days and days away from these moving averages, which on average, like the 50 period moving average averages about 24 days. We're over 100 days. Historically, I think 128 is the all time. It's been crazy. But what are you going to do? You know, you figure out how to flow with the market, or else you will be stuck saying like, "Oh, I should have done this," but it didn't. So you're either right or wrong. But September is usually a weakness window coming out of summer. The fact that it's not, I feel like we have this like I keep talking about this collar trade. 6,500 was offering support. Okay, we saw positive gamma flip in last week once we had a 3-day correction. So Tuesday, Wednesday, Thursday last week were down. We got into negative gamma territory. Friday it flipped. We're back into positive territory. Positive gamma means there's going to be forced buying in this market. There's going to be zero DT support almost every single day. So unless the market takes back 6640 and this becomes negative gamma, this is like one of those weird markets where the VIX is still up. The VIX is like 16, but the market won't go down. Unless we have like a flare up in volatility where the VIX spikes to 19, 20, 25, 30. I mean, that's about the only thing that's going to really jolt this market. So, I can't imagine anything right now outside of, okay, yes, we have a government shutdown threat this week in the U.S. Non-farm payroll being a terrible, disappointing number this week on Friday. I mean, October could kick off in spectacular fashion with a correction, right? But is there going to be an obvious like economic calendar event attached to it? Maybe, right? And even if it's a pullback, it's like to what degree? I mean, technically, we could just pull back 4, 5, 6%. I don't think that's unreasonable. That's certainly not breaking the structure of this market. The scary stuff would be if we're facing a double-digit correction, which nobody knows. I don't know that, but the market's ability to bounce and bottom from these huge, ridiculous corrections. I mean, April lows all the way back here. Can everyone see this trend line? We go 4-point here. So this thicker trend line connected me from the lows of COVID. Okay. That's a pretty big trend line. So that trend line, if it's going to offer support, I think we'd have to fall 20+% just to hit it again from current price, or I guess from all-time highs. I mean, we're talking about a 20+% correction just to find what is still bullish support. So I'm not a bear. It's been amazing what this market's done this year, and it continues to do. But daily overstretched conditions, rising wedge that's kind of rolling over. If we have a sideways chop that won't break above 67, we can clearly see some 6,700 resistance, right? We fall back in. I mean, I'm just thinking about markets wise, probably the hardest trade is that it keeps going up. The hardest trade is it keeps going up. And I say the hardest trade because, look, there are institutions that have been not participating. There are big pockets that are underweight equities. And if they are just going to be forced to buy, this market will go higher. If they are sitting here waiting for volatility, waiting for a pullback, and we actually get one, then it makes sense that the dip is bought. And that's why I'm still looking at this area to be bought. I mean, technically, this would make a lot of sense. But if the market just keeps doing this, we can't stop that. We have to find a way to like flow with that. But I would certainly love to see at least some type of technical pullback so we can deploy some capital. Also, if you get these, the late participants, literally buying the highs and you're going to reward them, I feel like the market shouldn't want to do that. I mean, if anything, it's like get all the people on the fence in the boat at the top and then shake them out for a little bit. And then we see, where better money gets positioned. That's why I thought that change in sentiment last week would have been nice. So here's AAI. We've seen a couple weeks of printing positive bullishness. So we went from 28 to 41.7, 41.7. So the bulls didn't change from the last 2 weeks once we had the big jump, but the bears have been slowly and steadily decreasing. Okay. All right. Why is the SPY going straight down right now? Is it? You talking about futures? I mean, futures has rolled over a little bit. Yeah. Okay. Let's keep an eye on this. So plus or minus on the morning. I've got SPX going higher. I'm going to see how high I can sell this morning. So 67. Let me see if I can get like a 05 and 10. That's 30 cents. Those deltas are way off. So I'm going to try to do a 67.05. Look at my ATRs here. So 6,700 is a 100% ATR. I'm going to try this 05 and 10 for $1. Pending order. And I did 05 and 10. I'll do a 15 and 20 for $1. Should be difficult to get there this morning. I'll move this all the way over. And my VIX box is at 9, 6709. If we look at a standard, okay, now I've got my deltas. Standard, I'll go 95 and 67 to 14 delta. Okay, I'm going to try to get a buck on this range trade right here. Let me see if I move up. Okay, I'm going to let this marinate. This is a, I'll get these in Telegram in just a second for daily profit play. So 14 delta. And let me go 35 by 30. I mean, cancel this one. So that's a 95, 6,700. And then I'll start at the 35.30. There we go. So you can get $1 for this. $1.05. Okay, give me a buck. This should fill for $1 at least. All right, so I got some trades in coming in the alerts right now. Okay. Today is the 29th. Okay, first trade's in, and then pending orders, putting in at the tops. All right. So daily profit play Telegram trade is in, and then two pending orders with the bear call spreads. So get this organized. SPX 1, 2, 3, 4. Okay, so that trades in. And let's see if we can pull $1 out of this and get maybe 30, 25, 30 cents. See if we can hit 25 is pretty mechanical. I'll go 25. Okay. And all right, take profits in. Get the tracker updated here, 929. Center price is around 66.65. We'll do a 66.95. Okay, so far price action's pretty calm. CENX crossing 29 is at fresh highs. Yes, it is. So I love how I've got exposure in this. I own the stock of CENX, and somehow Alcoa, another aluminum maker, is just not doing anything. Come on, Alcoa. I mean, CENX is, that'd be a fantastic run if we can break this multi-year range. This thing hasn't done anything since 2008. Tested tops, tested tops. I mean, if we break, this could be pretty exciting. If we break this range, this is a $4 support level to $30 resistance. That's a huge breakout potential. If we break 30, just box this thing in. So there's a high, low. And just throw it on top. Okay. So this line, see, that's a 100% projection. Okay, how are we doing this morning? Any thoughts? Any questions? Price is gapped higher, and so far, little to no price action, which I guess that's fine. Little to no price action is totally acceptable. Does the market want to keep trying to grind up into higher highs? Is the market going to stay here for the morning, get back the gap? Either way, we got some levels in. Okay, 95 cents. Okay, yeah. I mean, that's fine. I got filled for $1. 95 cents is fine. Hopefully, I mean, we don't really want to see a sharp move to the downside. 35 would be the put side, right? So I've got the 35 put side here, and 95 is the call side. Is it 95 or 90? 95. Okay. So I need to see price stay inside this for daily profit play. See a price and just kind of chop around. Highs, lows on the day. 14, 15 delta. Yeah. I did a 35 for the sell put. So yeah, hopefully price action is just pretty chill for Monday. That's what we want. Positive gamma environment is good to keep this thing pseudo supported. You know, as long as we stay above 66.40, that's a good sign. This could just continue to kind of perpetuate support. It has been weird watching the market melt up by watching the VIX go higher. That's been an odd correlation. So I think what's likely lining up here is all of the support around that like 6,500 pin price. That's a gamma pin. That's a JP Morgan collar trade. It wasn't when the quarter started. Let's go back to the quarter, right? Let's go back to SPX. When did the quarter start? July. So July, August, September, that's Q3. Go back to the quarterly candle. So this would have started July 1st. We were at 61.89. Okay, 61.89. So that 6,500, I mean, again, it was based on current volatility, probably sitting anywhere between like a 10 and 20 delta, about 5% higher. So I mean, we have blown through that level. My point is when that JP Morgan collar trade, there'll be another one too. Like literally Wednesday this week, October 1st, there's going to be another JP Morgan collar. It's roughly going to be a 10 and 20 delta out to the end of the year. And that'll give institutions a chance to position for either one, hedging to those levels if we're going to threaten the upside or threaten the downside, or obviously contain price action for the quarter. That's pretty standard. In fact, if you were in my daily profit play session last week on Friday, we pulled up on Thinkorswim. You can go into the on-demand feature, which will go back and find your actual option chain from a certain set time period. So I went back to the first trading day of January and went out to the end of the year to see like what the year's market maker move was. And I want to say our high and low, we had the lows around like, I think the 10 deltas were around 4,800. The 15 deltas around 5,000. And then a 15 delta call side was, I think it was like 67 or 6,800. So for the end of the year, we shouldn't necessarily be through those areas, if you're asking me. I mean, based on how institutions can position for an entire year, unless obviously they're hedging more near term. But the market should be relatively contained where we shouldn't be able to go above like 6,800 for the end of the year. And we shouldn't have to go lower than 4,800. Well, we tested 4,800. Now we're up to 6,700. So my point is, when the year started, if this was our high probability top and this is our high probability bottom, well, we tested the bottom. We're not through it. If we test the top, we shouldn't necessarily go through it, right? And that's just what market makers do for every expiration, for dailies, for weeklies, for monthlies, for quarterlies, for yearlies. And they all change within the context of volatility. They can hedge, but their mandate is to be zero or delta neutral. Okay. Too quick on price change. I mean, price really hasn't gone anywhere. So are you seeing a lesser fill because price hasn't gone anywhere and time is decayed a little bit? I mean, now I'm at a 10 delta and a 17 delta for my trade. So you can go, you could tighten up on the call side a little bit if you want to get a similar fill. Again, this is what I say for every daily profit play. Look at your deltas, right? I mean, I'm probably a little bit higher on the put side than I should be if I want to go delta neutral, but I'm at a 17, which means I should probably bump my put side or my call side to a 90 by 95. 90 by 95 and the 30 by 25 is offering $1, or 35 and 30 is offering $1, $5, $10. So if you shift the deltas a little bit, your call side maybe needs to go down one strike. And that would give you the $1 for better risk management. So if you're not getting filled at the same trade that I took, if you move the call side down one strike to the 90 by 95, you can keep the put side the same, or even get $1 for this one going 30 by 25. But, because we're in positive gamma, I wouldn't mind doing like the 40 by 35 and then keeping the call side a little bit higher. Still grabbing $1, trying to stay out of the way with the call side. But you can tweak those strikes just like one strike up or down to get. I just think that's a good balance. I like if I'm taking a 5 wide spread, I'm trying to get filled at $1. Okay, gotcha. Rain says did exactly that. Perfect. So far, so good. All right. So we're up about 11% on the daily profit play trade. The other ones haven't filled yet. The oh 05, so the 67.05, 67.10 bear call spread haven't filled. That's 20 cents. It's not filled yet. 67.15 and 20 hasn't filled yet. They may not fill. Okay. Which is totally fine if it doesn't fill. So we'll just kind of let price do its thing. Let me see if I can find some expirations. So this week, expirations. Walmart. Do I want to keep the shares? I have shares of Walmart. They are in. So October 3rd, I've got some calls. Where'd they go? Could have swore I had some calls this week on Walmart. So I have some shares covered at 100. Gosh, I mean, if we have any correction, I could see Walmart being a range. I mean, I don't think I need to be cute with this. If it's going to stay above 100, then I get it called away. I can always reestablish new positions, which I'll probably end up doing that. So I might take some profit on Walmart this month. It's up, 13K. Probably a good spot to protect it versus trying to sell calls again at the highs. I'd rather just sell puts. So I might just take the profit there. What else? There it is. So Tesla, I've got some calls this week. Nvidia has some calls this week. SPY some calls this week. Q some calls this week. MicroStrategy calls this week. Just going to keep rolling calls. Walmart, JD, IWM, these are all calls. So I will be addressing these trades. Some of these are campaign trades that I've done in my Project Options Edge. IWM is out to 18 days, but these 4-day, that would be out to Friday. So I need to do some calls, or I wouldn't mind letting Walmart get called away for profit and then sell some puts. JD, we're at 35.49. I have a covered call at 35. I might roll that since the premium is a little decent. I think if the US markets pull back a little bit, I mean, it's up $9,000. That's pretty good. I've got like 1,500 shares of JD. Now, I do want to check something on the fundamental side really quickly. And then Q, SPY, NVIDIA, Tesla, those are all owned shares that I'm just looking to roll some calls for income. Let me check on the fundamentals really quickly for JD.com. Okay, Snowflake wise, pretty good. I mean, there's still some upside potential on this stock. 9 times price to earnings. Fair. I mean, this is insane, man. I could see why Michael Burry had this one as like one of his kind of favorite plays. Oh boy. I feel like what's going to happen here is if I don't roll this, I think I'm gonna try to roll this for possibly I mean, at least a minimum credit, but also try to roll it out maybe in time and roll it up to increase my bottom line. So I think I've got this thing break even. Let me check my break even. JD break even is now 32.70. So 32.70, get it called away at 35 times 1,500. So 34.50 in profit. Okay. But if I can roll, I mean, this does look like it's on the verge of a potential run, though. I don't want to get too cute with this thing, but if I am going to add another covered call, then I clearly expect to be forfeiting any type of run to the 40s. If I just get it out of the way, which means I roll my strike up high enough, I roll it out far enough, maybe I get lucky where I don't get the stock called away and I can enjoy, maybe another surge into the end of the year where this thing runs up into the 40s and I don't cover it. And I go from a, 32 break even and let it get up into the 40s and I can grab over $10 a share versus trying to choke off like a $2 to $3 winner. Either way, I mean, a $2 to $3 winner is fine. It's income, but it's obviously much better if the market's going to run. So I'll play around with that this week. So just putting some notes down here for some to-dos. Also want to talk some gold and silver for a moment. Gold and silver. Gold is up to some fresh highs again. Let's see if the dollar actually retreated last week. A little bit. Dollar's down. Gold is up. These ETF flows have been pretty insane. The bar count, the percentage, we are now 16% away from the 200 moving average, and bar count is, I want to say, over 500 bars. Over 500 bars. Wow. That is quite the stretch. Well, silver almost at all-time highs. I probably have to acknowledge, like, I'm going to be taking some profit here. This is why I have a bunch of chart alarms set. If silver makes a run this week, I think it is wise for me to at least trim some of my my SLV exposure. So measure move up into the 40s. Here's a weekly chart. This thing potentially gets back into the, $47 to $48 handle. Let me check the actual spot price. So we have two highs, 2011 and 1980. And there's current price. So that exact spot price is 48.01. That spot price from 2011 is 49 and change. I mean, I think realistically there's room to poke into these highs. But this is not something I want to be, overweight silver. I don't want to be overweight silver. I want allocation, yes, but I don't want to be overweight because SLV right now is up around 90 grand. I'm not going to give that back. So I think we can still run to these highs. We might even surprise to, newer highs. But the reality is, protecting some profits, whether it's a trailing stop loss or selling covered calls on my position to protect it. So we've got some shares and the diagonal spread is running even further. I just haven't sold against it yet. I mean, I just basically it was a diagonal spread initially. Now it's just a call. I have a long call. So I'll probably close down my call trade for a good chunk of profit. I mean, I'm up almost 100% on my calls. And then I have ownership with a protective, or these are all naked puts to buy more. So, I mean, silver's just looking good. And I want to make sure I keep buying power at the ready. And, allocation wise, no more than like 5% silver, 10% silver. Probably 10. I think 10 is safe. I think 10 on silver, 10 on gold. You can throw another 10 on Bitcoin and then maybe splice it up a little bit, however you want. But I'm thinking that's a pretty strong allocation to keep moving forward. Okay. So chart alarms are set to the upside. I'm going to mark here, making a run right into the 2011. So edit 2011 all-time high. And in a way, it's like, I don't think silver is just an industrial metal. I think silver is now seen as a strategic metal. These all-time highs might be just in the way. I mean, if we hit resistance, it would make sense, but I'm still very interested in buying dips on silver. And if we break highs and go higher, bring it on. I think silver and gold have a lot of upside potential still. All right, how's everybody doing for today? So far, so good. Price action's been pretty quiet. There we go. So about 15% on our daily profit play this morning. Prices doing what we want it to do. If we get a chance to get filled higher, I mean, I just want to see price stay here, take our winners. If price goes a little bit higher for the morning, we might be able to pull in that fill at the 5 and 10 and the 15-20. I want to get filled up here for $1. So hopefully we'll get those. Take a look at our volatility. We open up right around the 50%. We would be, pretty safe if we come up to the 100% ATR. I mean, we'd be pretty safe. If we get filled on those bear call spreads, we should be safe for those to be profitable. But so far, so good. See if our price target's going to get hit. Did anybody go a little bit wider than me? If you went 10 wide or 15 wide or 20 wide, usually with today's price action, if you're a little bit wider, you tend to get faster time decay. Just because the buy legs aren't as price sensitive. If you're just one strike out versus, two strikes out or hitting 10 wide, 15 wide, 20 wide. Just curious if you're able to get in and out a little faster. Dave, you're 15 wide. Okay. Are you out on any right now? If you went 15 wide, are you seeing some profit on, a couple of them or one of them? Jeff's the same as you. Got filled at $1 out at 80 cents. Okay, good. Not yet, Dave. Okay, 10 wide on Monday, says Greg. I just got filled for 25. So it's already out. Profit. DPP update. Today's DPP entry for $1 credit. Closed for 75 cents debit. Quick profit. I mean, that's really fast. 26 minutes in the open. Hitting a 25% take profit. So we'll take that all day, every day. Now price can do whatever it wants to do for the rest of the day. Who cares? Good win. We'll take it. Okay, we'll take it. Price not yet. Okay, didn't fill. Close it down. If it didn't fill, not necessarily, because we could find out today is one of those days where it just does exactly this all day. If this is what the day is, I mean, maybe it's a very lackluster day, which is what a typical Monday is. If this is your center price, you can find your deltas. I mean, understand that the expected move at the beginning of the day was a plus or minus 31. It's probably significantly less. So the only real credit you're going to get today, now that it's 10 a.m., I'll show you on the option change, but you're probably having to go from a 31 wide market maker move to probably like a 25, maybe even a 20. So that means you're going to have to sell calls tighter to price, sell puts closer to price. You're just going to be a little bit tighter. That makes sense? Let's see what the market maker move is adjusted to. Right now, 29th. Let's go to SPX. So plus minus, it's down to 16 points. So in order to get any reasonable premium, you're only going to be able to go out about 20 points. So if you sold the 90, that's a 20 delta right now. You sell the 90, 95. And maybe a 20 delta on the put side. I mean, I would, again, that's getting a little excess credit. If you go up higher on the call side, you get $1.15. I mean, so you could do a 95 by 6,700. So 66.95, 6,700 on the call side. Put side 66.45 and 40. You still get 90 to 95 cents, which mechanically speaking, it's 17 delta, 14 delta. I would accept that as a delta neutral trade and then see if price just continues to do what it's been doing, which is nothing. And that certainly helps. Yep. And so, I mean, if you're in, great. If you're not, we can always do it again tomorrow. So never feel, especially in a zero DT environment, never feel like you have to chase these markets. Ever, ever, ever. Right? Don't accept mediocre fills. This is why I'm so meticulous on, if I'm going to go 5 wide, I want $1. If I'm going to go 15 or 20 wide, I want like higher premium. I want the math to make sense. I obviously want the probabilities to be high, and I always want to know what I'm risking. Okay. Same thing on these bear call spreads that haven't been filled this morning. I'm not going to accept a crappy credit. If I'm going to risk $400 today, I want to make $100 or most of that. So like the broken wing butterflies, we got in for $1. I'm closing those out for 10 cents debit. I'm going to take most of that profit so I can eliminate the risk, but I want most of that profit. Okay. All right. Give me 1 second here. Okay. All right. Let me look at the calendar here because I'm going to align a couple of master classes for the week. So last week we had master classes for daily profit play on Monday and Wednesday. Or I'm sorry, Monday and Friday. Waterfall income we did Tuesday, Thursday. This week, we had. I want to address a couple more things in daily profit play, so I'd like to do some more master classes this week on daily profit play. I wanted to spend more time kind of giving that breakdown. We talked about butterflies briefly. What are some of the strategies that we take? I'll just list these out. So, I mean, if you're interested in what do we do for daily profit play, we do the standard daily profit play, the reverse daily profit play, bear call, bull put, and the broken wing. Okay. I usually don't go outside of that. I usually don't. So that's a pretty decent chunk of strategies all for one service. And the reason why is I need to be flexible intraday. A 0-day environment is it's either you win or you don't. And don't be cute with this is why I'm so adamant about trade size and risk, because there's not much you can do to roll a 0-day environment. So if you're wrong, it's hard to roll it the next day without digging yourself a deeper hole. I don't like to do that. So what you can do is you can trade small, accept the fact that 1 out of 10 times, give or take, the market's going to not cooperate directionally, and we're going to get, kind of ugly move. Now, I mean, our statistics is like we're trading a lot of these things with like an 85% edge, and our win rate is over 89%. We're almost at 90%. So that little edge for us over 450, 460 trades is what's allowed us to make a lot of good profits this last year in daily profit play. So we just keep sticking with our plan. Okay. Let's see here. Markets are up. ADD is down. Greg says 10 wide in at 160, out at 120 on 4 contracts. Very nice, Greg. Aruna says, I'm new to pinch point scanner. Any master classes? I know pinch point. I'm going to have a class. Let me do this. Pinch point scanner. Here's what I'll do. I'd like to have, so watch list Wednesdays, usually when I showcase pinch point scanner during this daily profit plan session. I'd like to have a master class on Wednesday for pinch point. Okay. So what I'm going to do this week is let me look just to make sure I can accommodate this for the week. So open up my emails really quickly. Okay. So I'm bringing up the calendar. We should be good for some master classes this week. Let's do a daily profit play. So, Dion, I'm kind of doing this live with you right now. Daily profit play masterclass. We'll do one today at 1 p.m. And I'll do another daily profit play tomorrow at 1 p.m. Wednesday, I will do a pinch point masterclass at 1 p.m. Okay, and we'll do a 2-day workshop master classes on daily profit play Monday, Tuesday, pinch point. I have a Wednesday. If we need more time from the master class on Wednesday, then we can sprinkle in one more pinch point this week. Okay. So I'll do this. I'll write this down. And again, all these sessions are going to be recorded, but I'll do a master classes this week. So daily profit play. Monday, 1 p.m. Eastern time. Tuesday, 1 p.m. Eastern time. Pinch point. We'll do Wednesday, 1 p.m. Eastern time. And then Thursday, Friday will be a TBD. If we need more time with pinch point, I'll sprinkle another class. I would like to do actually by Friday. Friday for sure, I'll have this will be a project options edge video update or a live session. I haven't had a live session for project options edge in a little bit. Usually it's just take the trades, the alerts. I do video updates for that. So I'll sprinkle this in. This is all going to be added in this week. Okay. Did you roll the bear call 66, 30, 90, 30s in the money expires tomorrow? Yeah, Gerald, we rolled the 90. Let me check. I don't think I thought all my strikes are either rolled out to October or let me double check here. Gerald, what is that trade you're referring to? Bear calls 30 by 66, 30 by 90. That's way too wide, dude. I've never been 60 wide on a trade. I could be like 15 or 20 wide for broken wing butterfly, but there's no way that I'm 60 wide. So I'm not sure what trade that is you're talking about. So if you got a service trade number, let me know, but that doesn't seem like something I'm familiar with going 60 wide. That's way too wide. Okay, let me know. All right. So master classes this week, daily profit play today at 1 p.m. I also have a live session for my waterfall income today at 11:30. I will be live per usual, trade by noon. Daily profit play live class 1 p.m. today, Tuesday 1 p.m. pinch point. We'll have a showcase for the scanner. I'll do some trades. We'll do some strategies. We'll get a masterclass in on Wednesday. Friday, project options edge. If I have to sprinkle in another class, I'll sprinkle in another class. Okay. All right. So that being said, here is price action on the day. Deanna, you good with that for the calendar? Daily profit play today, tomorrow, Wednesday, pinch point, Friday, project options edge. All right. So while we are checking in, so price today, I'm still looking to see if I can get filled on the bear call spreads up here near the VIX box highs. The daily profit play is out with profit already, so that's good. And master classes this week to get ready for waterfall income live trading session at 11:30, daily profit play today at 1 p.m. and Tuesday at 1 p.m. Pinch point masterclass on Wednesday, project options edge. Let's do a live session. Project options edge for it's a smaller group since it's more of the big discretion, but I've got about 50 members in that class. I'd like to do a live session with them, make sure we're all doing well. I think we need to start talking about some profit protection. We have a lot of good positions running, and we tie up a little bit more capital, some buying power in project options edge. But I mean, let me go through some of the trades here. So if I go project, so I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 16, 17, 18, 19, 20, 21, 22, 3, 4, 5, 6, 7, 27 winners out of 28 trades. We've only taken one loss, and that was a half a broken butterfly loss in Spotify. So 27 out of 28 for projects. And those are like decent income trades. Those are each like worth, $1 to $2, sometimes $1 to $5, sometimes even over $10 credit on some of those trades. So that's been a, really nice like discretionary service for me to run. I manage a lot of accounts this way, and it is a little bit more buying power intensive. We have some campaign trades where we own some shares of stuff, sell some calls, generate some income. We do some ratio spreads. We get a little bit fancier. But all that is, again, it's not to be advanced. It's just using option strategies at our discretion to make sure we can trade these market up, down, sideways. Okay. So anyway, it's going to be a busy week, which I'm looking forward to. We wrap up the month tomorrow and the quarter. We have a new month ahead, kicking off in October. It is officially Q4. Fed is likely going to be cutting by the end of the month. We still have to get through labor market on Friday. That is kind of the one big thing is as we start off this week, Trump's going to be on the calendar today. Okay, fine. Does that mean anything? Good, bad, and different? We'll find out. Let's see what price action does. Tuesday, any big news? Jolt's job openings on Tuesday. Wednesday, ADP, it's a precursor. ISM numbers. Okay. So are we above 50 on manufacturing? If we are, that's showing a growth in manufacturing. If we're still sub 50, it's still slow, but I mean, the trend has been up in manufacturing. PMIs globally are going up. Unemployment claims on Thursday and Friday, forecasting a unemployment rate that stays the same at 4.3, and the labor market that is just not probably going to see over 100K for a while. I would imagine we're going to see less than 100K, maybe even less than 50K for a lot of these job prints month to month. It's a low hire, low fire job market right now. And somewhere in there, you've got the mix of maybe a government shutdown. I don't know. So I think the market's done an incredible job of climbing the wall of worry. And, there's still some tariff noise going on, government shutdown noise happening, Middle East conflict. It's like, it doesn't matter. All that matters right now is price action remains supported. And we keep coming into these markets every single day and grinding. So right now, the low that matters. Is there a tracker? Well, the Telegram, yeah, there's a tracker. I've got a trade tracker for it. Pinch point's winning like 85% of the trades. Pinch point is we have 27 winners, 5 losers, 84.4% win rate. Portfolio's up $23,000. We have some open trades. Yep. So 84.4% of pinch point. Anyway, price action wise for the SPX is if we take out this 21 period, there's room to get to the 50. If we take out the 50, we have this low, we have this low, we have room to get down to the 100. It just depends on how aggressive this market shows a correction. I think a 4 to 6% correction is not difficult to see. If we have all of the hedging, all the support, all the positive gamma, if that just disappears and we see like aggressive hedging into early Q4, I mean, I just expect the market to open up October with some volatility. You look at April's candle, May, June, July, August, September. We have gone literally straight up since the bottom in April. How does this market not stall? How does this market not go sideways? How does this market not correct a little bit? I don't know, but it hasn't. But it's likely coming. So I hate that I sound like a broken record, but I am cautiously bullish. And I think that the caution will reward us for the patience and discipline to wait for a dip or correction for us to participate in. The hardest trade right now is no correction. That's the hardest trade. If the market wants to go sideways, I'm fine with that. Sideways is fine. Down scares everybody, but down is where, if you've got dry powder, down is where we can start positioning for high income opportunities and also getting better discounts on the market. Okay. All right. That being said, let me switch gears here to daily profit play. Like I said, I want to hold a masterclass this week. Monday, Tuesday, we'll go back to back. We just came off a 2-day workshop last week. This is an active session. Today, we'll talk more about some of the, well, it depends if we have a bunch of new students today in class, then we'll focus on the core strategy. If we have some returning members that were here last week, then we'll talk more about the alternative strategies that I deploy week to week, day to day, really. Okay. All right. So let's dive into this. This is disclaimer, some legal stuff. We develop tools and strategies to the best of our ability. No one can guarantee the future. Obviously, I don't have a crystal ball. There's always risk of loss in trading. Past performance is not indicative of future results. State results are from live trades. These are all live trades. Win rate is over 89% with an average return of about 14.17% with a one-day hold or intraday, because we a lot of times get these trades closed out within about 90 minutes. Okay. There will be losing trades. I'm averaging over 89% winners. That's real money, real alerts. We need to have about an 81 to 82% win rate to break even. So averaging 89 and as high as I possibly can, we've got a nice edge. So, if you're not there yet emotionally with trading real money, it's okay. Learn how to navigate your broker platform, start trading small. And I just say this a lot, but process equals profits. Okay. Don't trade with money you cannot afford to lose. We know that. All right. So today, let's talk about the idea that's hopefully worth $100 or more by, the morning, right? It should usually hit our automatic profit target within about 90 minutes of the day. So what we have to do is we set up a position in the morning around 9:35 a.m. and let the market take a few points in either direction. And as long as nothing crazy happens, we should see our take profit hit right around $100 or more, hit our account within the first 90 minutes of the day. Now, I understand that sounds a little crazy, and it might even sound too simplistic to actually work. But if you look at our trade from Thursday, August 14th, anyone using this unique trade could have done this with me every single morning, daily profit play, set